Hey guys, this is Rob with the Oil Trading Room. Thanks for joining me for this weekly recap for the week ending April 5th. Last week I covered some scalping signals. It's the easiest way to learn in the room. These are methods that I teach in the trading room that are easy to learn and easy to see on the charts. And there are many other signals that we use, of course, but I'll just show you the basic ones that are similar to the ones we had done last week, so you can kind of see, if you just started learning or following these videos, you can kind of see what the week would look like if you were joining us, if you're not already a member. First off, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. Don't use the grocery money for trading. It'll be hard for you to do it if you do. It'll be hard for you to do it. This is a super map, and actually in this last week I've expanded the super map. Let me show you the current one that we're using here on the spreadsheet. I added some things this week, some more advanced targeting methods. This sheet shows us what the expected ranges are going through each period of the day, each 30-minute period of the day. Shows you what the expectation is based on what had happened in the past. And so this tells us we expect 39 ticks in the first period of the day and 49 cumulative, 68, etc. going through. But then this also tells us what is the probability that the market's going to have a range expansion from that point. There's a 98%, 93%, 83%, etc. And then it tells us by how much. And then this row right here tells us what the prediction is for that point in the day. For that point in the day. Actually, we come in really close on these numbers a good percentage of the time. These other numbers in here tell us when we're going to take out prior periods and what the probability is. Some of these 80–90% that we're going to take out the prior periods. This tells us we're going to take out the prior period at an 80% probability. This one tells us we're going to take out the prior three at 80% probability, and etc. We knew we were probably going to get some range expansion in E period today, and that is certainly what happened. And so there's a lot of things, a lot of details on this table that can help you with your trading. I cover this live in the room each day. This period right here, for example, told us there's only a 20% probability that you would break out of the range by 5 ticks. And so what's that telling you? It's telling you that's 80% against breaking out. And this is telling you it's only 50. And so you have a pretty good idea that this particular period of the day is going to be consolidative. E period tells us that you're likely to get some expansion in here for the next hour or so. And then it gets quiet again, and then J period, the last couple 30-minute periods of the day, it tells you that you're likely to get some expansion as you go into these 3 periods of the day. This is actually making predictions that it's not very likely to do it by very much, and this can be huge in terms of knowing whether or not you should be holding or folding your trades, whether or not you should be scalping or holding. You can see from this table in general that scalping to the prior 30-minute period extreme is a very viable strategy in this market. That's the same in other markets as well. So, but this map I cover daily. Having this map is part of the room membership, and there's just all kinds of things that we can tell from using this table, including extending the current range as it stands using the numbers in this table and making range predictions all day long. We also have other methods of targeting that get hit 87% of the time, even some as high up into the 90s, 96%, things like that, that we use each day to decide or to scalp towards, depending on how you want to trade, what works for you, holding for longer or just scalping your way to a target. Yeah. And we teach those methods also in the room, how you can do that. Yeah. So let me pull up the chart for the week, and I'll go over some of these signals that we had this week. I'm just starting back here on Monday, yeah, the 1st. This is a pattern that I showed you in the video last week called the 3D pattern. 3D pattern, yeah. And that will happen on a red background to sell. Yeah, we just look at the background colors to sell. There would be a couple in here that don't have the background color, but for the most part, I encourage you to learn the ones with the background color first, because you just get red on red, and you get the 3D pattern, and then it goes. Yeah. Now market came up here, and then bannered about here. You got another 3D pattern right here, another 3D pattern right here, another 3D pattern right here. Real easy to learn that one. Just using the trap trader oscillator, you're just going to look for lower dots, higher dots, lower dots, higher dots. Yeah. And this one's on a lower dot's on a green background, so we don't mess with that one. Yeah. The green background's telling us the trend is up. Yeah. And 3 dots right here on red. Yeah. So. On Tuesday, market came up in A period, formed a little count going up here, A, B, C, D, and it did a little hook right here. We call this a pivot retag, level 2 pivot retag, and we pick up, this one's called a T2. I've been teaching that pattern as long as we've been in the room, T2, TTO pump. That trade right there is generically about 84%. There would be other T2s on these charts that I might not have marked, or if it didn't do it with the background color on the first bar, I didn't mark it for you. This one here is another T2 pattern, going higher. This one here is a 3D pattern that we just covered a minute ago. Yeah. And the next day, Wednesday was a crazy day. We had like 10 or 11 of these signals. 10 or 11 of these signals just back to back all day long. Yeah, just 3D, 3D. This one's called a boxing pattern. When you get this on the red background, 3D again. This one's called a lead out or a boxing pattern. This one a lead out or a boxing pattern. This is a special one here. This is the only one this week that I'll mark, and we had specifically talked about this trade live in the trading room, and so I did mark that one on there. 3D pattern again right here. 3D pattern again here. This one's called a boxing pattern right here. And so lower dots here again. This where you get this pattern with the double reversals like that, very high probability. Very high probability. There's a T2 pattern right here, and this one, that one might have gotten mismarked on there. I'm trying to see what that is. For whatever reason, either no, that one doesn't belong on there. And this one's actually a T2, a form of a T2, call it a non-cycling type 2. I'm not going to mark that one. That's late in the day. Next day, 3-dot pattern right here with the double reversal again. This one's a T2. This one's 3 dots. We traded that one live in the room, of course. And this one here, T2. This one's a boxing pattern, 3 dots, T2. There were some in the after session that I had marked down here just because I myself was trading there. And today came up, got the 3-dot pattern right here, and then T2 pattern here. T2 pattern here, trapping pattern. We did this one live in the room. This is a very interesting case relating to the super map. The super map had predicted that the D range was going to be very contracted, and if you recall from that. And then another system that we use said if the market had gone just a couple ticks lower here, it would have been 89% to go down, and it got rejected at that level. And so when it came up here and you got that line break, there's a T2 with a line break, that the market was going to head higher. We had some targets up in here also, and the market traded up there. Nice 15-tick move on that, but I only marked it for 5. Yeah. T2 here. This one is a lead out going higher on the green background. That's one of the ones that failed this week. And this one here, higher dots, but line break here on double reversals. And this one here, this is a bread and butter trade. You can either take it on that first one, or you can take it on the second one where it gets the line break. But this is a double signal right here. This particular signal is what we call a T2 signal, but it also gets the line break there on the trap trader oscillator, making the probability for this going higher staggeringly high. And so many of these trades are good for a lot more than what I'm showing you here, and we can just go over that on trade markers. Trade markers is a program that we use. It's a crude oil smart Renko room scalping signals. Yeah, and you can see for the week 97% winners on this, and just taking the scalp. But you could also set this. You'll see this is about 1487 after commission and everything. You can see also I could add in, if you take it to 10 ticks or 15 ticks, what would happen with the result there. On the 10 ticks at 81% on the second contract, and then 69% on the third one, each making more than the prior 16, 1950, 2450. Yeah. And so there's more in these if you want to trade them that way, but I usually just do it to the minimum, because that's what I call getting yourself into a manageable trade situation, is what I call it. So if you know there's a 90-some-odd% probability that the market's going to move so many ticks in your direction, then you also know that you can manage that trade for more. And so you can get a runner trade on, or trade it for 10 ticks, or whatever you decide you want to do with that. Now I just set the stop on these to 15 ticks, but you don't have to use that either. You can do it smaller, but I just want to show you for a minute what will happen if you make this smaller. You have 97% and 81%. If I knock that down to say like 12, it goes down to 94%. Down to 94%. 94, 78, 64. Each one still being higher. You knock it down to say 10. I don't recommend that you do that, but it's still 89% at 10 ticks of risk on this particular test. Why would I set this thing all the way up to 15? Well, because I like that high win percentage. I like that high win percentage. So I had someone asked me this week, oh, I'm risk aversive, so I want to use a small stop. Well, so the question becomes, do you want to have 97% and $1,600? Or do you want to use a smaller stop and have 89% and $1,200? Right? So lifestyle choice, really. Do you want to knock that down to 8 ticks, and now you're at 80% and $890? Well, you just cut your profit in half, right? So what I want to see, there's another thing that we do in the room, and we talk about it a lot. what is the amount of time these trades are taking? You know, give this guy some breathing room, right? I can go over to this tab on trade markers, the period tab. I hope it's going to work. And I can go to set this annual. And what this tells me is that the average trade is 0.83 minutes. 0.83 minutes. So these scalp trades are boom, boom, boom. Less than a minute in duration. If you wanted to hold out for longer, see, so you make the decision. Do I like to trade? Do I like to trade these scalp trades that last less than a minute, and then I'm out, and you kind of reset mentally, or you know, what if you decide to trade it for 10? What if you decide to trade it for 10 minutes? Well, suddenly or for 10 ticks, suddenly your trade went from less than a minute to 10 minutes. Yeah, that's okay. That's okay, but you might be happier doing it in 1/10 the time. So each one of those extra ticks costs you close to 2 minutes. Yeah, something like that. Each extra tick. You know, what if we took this guy out to 15? Then how long are the trades? It really just depends on how you want to slice it or dice it. Some of these trades lasting 42 minutes. If you're comfortable doing that, but we've got one fellow in the room. He's been with us since the very beginning. He takes these scalp trades, and he takes other ones than the ones that I'm just showing you in this recap video, but he's take up to 93 trades in a week with only losing on 1 or 2 of them. Yeah. Those trades lasting less than 2 minutes each, yeah, using these methods that you learn in the room. So these signals are just kind of a gateway into a whole realm where you can trade these signals on these charts with high frequency and being in and out of the trade really quick. If that's attractive to you, then I'd encourage you to get in and learn some of these things. If you want to hold out for longer, that's fine too. But what's cool about this trade market report is when you know how long you're going to be in a trade, it can also help you to manage it, because if the trade doesn't develop in some reasonably quick period of time for that initial scalp, then you may have some recognition that the trade isn't working the way you plan. This whole notion of being in and out of the trade quick is happening largely because we know we got traders on the wrong side, and we are taking advantage of their wrongness. Yeah, it's the losers that are making us winners. And that's what I love about this kind of trading. But maybe in future weekly recaps, I'll cover some of the bigger signals. A lot of these signals are good. We've got one system on one chart that we use in the room, 89% to 10 ticks, for example, using a little bit bigger chart. And you can slice it or dice it in different ways and find a way for that kind of trading that works for you personally in the way that you like to trade. So this is what I have for this week for you for the trading room. These are some of the main signals that we focus on during the day. That I like to get traders in a place where they can identify these things quickly and make it work for them. We had one trader has been with us for 7 days as of yesterday, and he told me joined the room 7 days ago, and has told me he's have a winning 7 days in a row in the room. So I just love to hear that. It kind of feeds my soul. So if you have any questions or you'd like to learn more about how we do this each day, you can contact me through the websites. We'll help you to get started, or just go to the website and sign up. If you get involved in the room's an open forum, and it's not just me that's teaching in there, because the members are putting the signals into the chat and things, and it's being discussed on an open basis. it's just a wide open forum for learning how to trade. So I'd like to thank you for joining me. You can get all the resources from this this video here at oiltradingroom.com. Come join us. And you can get the tools that we're using. We're using the Smart Patterns trading system on this in the trading room. Yeah, and in this video, you're looking at the Smart Patterns trading system. There are just a tremendous number of ways that you can trade with these things. All of these we teach in the room, and you can get those tools and resources through indicatorsmart.com. Okay, guys, that's what I have for you. Thanks for joining me for this, and we'll see you next week. Have a wonderful weekend.